All right, y'all. Welcome to Xauusd School. It's the greatest gold trader alive. Chapter 1 or Lesson 1 is going to be candlesticks. So when you come on your chart, you're going to see these candles. Depending on how you have your settings, you should have them as green and red. Green candles are bull candles. That means that when they opened and when it closed higher than when it opened. And bear candles, the red candles, means that when it means that it opens here and then it closed lower than when it opened. That is the difference between bear and bull candles. Also, you have these wicks. You see these lines that come out of them. They are rejections. We also call them rejection candles. Sometimes, or depending on the shape, you like this one right here, you might call it a pin bar. Let me draw it. Oh. Depending on the shape, you might call this a pin bar. So, rejections and candlesticks. Next, we have trend. What you're going to want to go to the daily time frame on your charts, the D. And that will tell, and then look at if price is either if going up and making new highs, or if price, let me see this. Path. You want to see if price is going up and making new highs, or going down and making new lows, like that. Let me change the tool. Yeah, so as you can see right now on the daily, we have price going down, making new lows. So that's going to be your daily bias or your trend. Next is supply and demand. So supply and demand works on all time frames, but specifically we like to use it on the 15-minute. And what supply and demand is where orders are resting in the market. To identify a supply and demand zone, you're going to want to look for aggressive selling or aggressive buying, and then wait for price to come back into one of those zones. Here's an example right here. It's going to be the last opposite candle before whichever kind of move it is. If it's a down move, you're going to look for the last up candle and the whole body to the wick of the last up candle. But if it's a up move, like this one, you're going to look for the whole body of the last down candle. So when you see these aggressive moves, you're going to look for the pullback, and then next we'll talk about how to get in. Lesson 4, entry. So after you are on the 15-minute time frame, you're going to look for these rejection candles. Here's a perfect example of a nice supply and demand setup. Right here, you see these rejection candles after we had the nice aggressive move. You see the price pull back into that zone, the supply zone, and then we see the rejection candles. The rejection candle is going to be your entry on the 15-minute. So after you get that, you would have entered. Here as well is another example of it pulling back into the demand zone, and then you see the rejection candle, and that's how you would have caught this big move here or that big move there. So it's a nice intraday strategy. Now, if you're more advanced or you are looking for other opportunities, you can also apply supply and demand. You would just move the whole setup up. You would look for a bias maybe on the weekly or the monthly, and then look for supply and demand on higher time frames. Or you can also look for this on the lower time frames as well. Establish your bias on a mid-tier time frame and then use supply and demand on the lower time frames. It works on all time frames. Okay. And last is risk management. You do not want to risk beyond 20% of the account on any given trade. And even 20% is a lot in this industry, or as far as what they tell you. They normally tell you 1 to 2%, but it's going to be really hard to get rich risking 1 to 2%. So anywhere from 10 to 20% or 5 to 20% is where you want to risk on the account. All right, y'all. Thanks for tuning into Xauusd School. It's been the greatest gold trader alive, and I will see you guys in the next one.